Ladies and gentlemen, welcome to Walk the Block, Navigating Digital Finance. We are here to talk about, was it actually a Black Monday? And if it was, how bad? But enough of that. We'll get into that later on the show. I'm your host for the evening, Zenith. You can find me on Twitter at ZenithDI. But more importantly, I am joined with an excellent cast of characters here tonight. Up first, we have our technical analyst, Agent J. How you doing, buddy?
Actually, it seems like on my little tag there, it says Agent I. So I might have fudged that up.
I think it's just clipping into the underscore a little bit.
I think so. But I'm doing extremely well. I can't really say the same for the markets. Everybody seems to be all up in a panic. But you guys already know my position. Whether we are in a bear market or this is just another 30% dip par for the course for Bitcoin in the 4-year cycle, it doesn't really matter because I'm just going to buy more Bitcoin, buy more Ethereum, and it's going to remain that way until it is time to sell. And I will sell when QE starts. You don't sell when monetary policy is tight. It is silly to do so unless you're trying to manage risk. But otherwise, you don't trade yourself out of position. But I'm doing well. How about you, Track Dace? Good to see you, fellas.
Good to see you too, sir. Been super busy, man. Very, very busy. Thankful to have a lot on the plate. Glad to make it here for another episode. Tracker, how are you, sir?
Doing well, guys. Doing real well. And what Jay's alluding to, guys, on the selling part, yeah, you don't sell when there's uncertainty and stuff. You get it when there's final clarity. Markets are forward thinking, watching. Worst of the panic is probably about over. Not to say we have probably more to the downside, but most of the shock and awe is pretty much getting digested now at this point, and then we'll have more clarity probably over the next month or two. Doing well. Looking forward to it.
Well said. And by the way, we already have someone jump in. Oh, we got two people jump into the chat already. Up first, we got Centurion54X. He says, "What's up?" And then we also have our good buddy, Mr. Angry Twinkie. Although for some reason his name is coming up as something else today, so I don't know if he wants that out there on the internet per se. But I will.
Don't assume the person. Z. This could be Isaac Petruccelli, who just happened to have the same avatar as the next guy in chat, Mr. Angry Twinkie, bro. Like, don't assume the person. What are you trying to get canceled, man?
Hey, that's true. That's true. At the same time, though, look, I stream out a moniker as I think the rest of most of us do, except for Dace. He's a brave man over there, showing his face with it too. But yeah, glad to see all you guys in the chat tonight. We got a lot to talk about. But first, I do have just a small amount of shilling, if you will so indulge me. Folks, you can head on over to Twitter and check out Walk the Block NDF. That is our @ for our page over there. We post updates about when we're going live, what we're talking about, and some good information every now and then. So please go give us a follow. It would mean the world to us. Additionally, keep an eye out for the website, walktheblockndf.com. That is where we're going to be posting everything going on with us and where you can get all of our latest updates and the access to everything. This is going to become the centralized hub for all of our information, and that is going to be beautiful. But other than that, gentlemen, let's get into it. So, that was a day.
Quite a day.
We started off at 489 on the S&P 500. Closed at 504, but we also had a wick top there at 522. We also go into the hourly chart. This giant green lightsaber appears to be a bit of a rumor that was circulating where people are talking tariffs and saying that there might be a possibility that there's going to be a 90-day hold on the proposed tariffs, but turned out that was fake news. But if that's not enough to get you interested, there is other bigger information going on, which is China actually imposed a reciprocal tariff of 34% on the U.S. as a retaliation to the ongoing trade war here. And even on top of that, we also had the CCP itself just tagging Donald Trump for some reason. So, gentlemen, what do you think? Is it all WWE, or do we actually have data points to talk about from an economic standpoint here?
I think it's funny they didn't say anything. Like, why just tag it? That's the strangest. This is the strangest move to me. Very weird.
it's
like
so
on the surface. On the surface, definitely strange. The part of me that wants to be graceful thinks that, okay, everybody lives online now, And it doesn't matter if you're a private country. We know that Asian countries tend to be conservative and private in general, but everything is online. Everybody knows your business, and this is me extending the grace to both China and Donald, and thinking they want to handle things like adult. Look, instead of just Uncle G calling up DJT, like sending him a text, "Hey man, can we talk?" This for me, I'm thinking, okay, let's tag DJT, get his attention on X. Don't say anything. Stop airing our dirty laundry out for the world to see.
Maybe he'll do
And and affect the markets, like tank the markets left and right, fake news, etc., etc. Let's handle this like grown men, and let's have a conversation in private. Just tag him, don't say nothing, let them speculate what it's going to be, and we'll talk to him in private, and that's it. Right? That's me being very optimistic. Or
Maybe
this is just them trolling. This is just them trolling. Who knows?
Yeah, call it a psychological operation, if you will. But it's interesting that Twitter, or now X, has become the discourse for international relations. But I mean, we're moving further into the modern age, so I think things are only going to get weirder and weirder. But that's me personally.
Yeah.
Just as far as economic data, I mean, there's true fear in the markets, which if you were fortunate enough to take profits or DCA out into positions prior to this, congratulations for making one hell of a move and forecasting some things and doing proper risk management. If you didn't, you want to be looking at areas to get exposure. It's rare that you get these kind of clearance sales like this. These are gifts a lot of the times, where you're going to have major opportunities because people start to do irrational things. And this is when you have pure panic. People just start doing radical things with not even thinking twice about it. So stay calm, stay chill. And if you can, start building up DCA positions into the areas you're looking to get into, because every time VIX have gotten these kind of levels has been golden opportunities. We haven't seen levels like this. I know the one in 2024, but then you had, of course, what happened in 2020 with COVID. The other big one you had before this was the 2008 financial crisis. A couple other blips out there, but the panic in the VIX has really spiked hard. You haven't seen these kind of levels here, sustainable to-day back levels since COVID and the 2008 financial crisis. So you're seeing a really good panic. These are clearance sales. These are clearance sales, and you better believe TradFi is been moving positions around to build up dry powder to load up the bags. And all the smart money is doing exactly the same. These are not the times to do stupid stuff, but just be patient. I know Jay has been all over the TA, and I know he'll probably elaborate on it now, but just be patient. Don't do something stupid, but just start building up those DCA powders.
Very true. By the way, you said the magic word, which is fear, and I did want to touch on the traditional finance fear and greed index. I know we like looking at the Bitcoin and whatever here, but I do want to go around the horn real quick. Gentlemen, just give me a guess at where you think the TradFi fear greed index is sitting at. Jay, what do you think?
Single digits.
Single digits? Tracker?
Yep. I'd say single digits. That's what I'm thinking.
Dace, what do you think?
I know the one on CNN is 4. I know that.
Oh, way to spoil it. Boo.
4. So let's set this straight. You got fear.
4 out of 100
it's going crazy.
That's so funny.
When there's panic, I mean, that's always cliche, right? When there's blood in the streets, time to
How
buy.
did you not put it at 0? It's 4.
What? 0.
Look, you don't hear me out. I'm one to rag on the legacy media because I think a lot of them are pretty terrible, and I think that CNN traditionally, especially the newsroom, has a very large bent in the Democratic direction, or more importantly, against Trump. So I wonder if how much of that is bleeding over to CNN business here, but it is quite the number to see. Single digits is super, super rare. To get it below 5, my God.
Yeah. Dude,
the VIX opened up at 60 on the day.
Ooh.
Yeah, cool. If
Boy.
you recall, it ended the day on an upswing Friday. It was like it capped out at 45 and was climbing.
Yes.
See right
Yes.
there it is. Like there was no wick to the upside on that big green wick coming up. And it just kept cooking this morning.
Yeah, you got to go back. You got to go back to COVID to see those kind of spikes like that. That's when how far back you got to go.
So
and those were a great time to buy.
Absolutely. Did we get higher than the carry trade today? Because I know as of yesterday we were not.
We didn't beat the highs.
Oh wow. Okay.
Because this one was 60, 65, 66.
Yeah.
We started out the day at 60.
How interesting.
But the difference is that one was just a major spike and it snapped out real quickly. It's that candle, but you actually got candles that are holding strong. So
Well, yeah, it was intraday. The
Yep,
candle
exactly.
trade was one day for sure.
Yep.
Dace, you're fading in and out on your mic.
Copy that. Let's see if I can fix it.
Yeah, I think people have such a short attention span. They don't remember that COVID historically great time to buy. Either you caught the dip there or you caught the massive discounts that occurred several weeks post COVID dip. Great financial crisis, housing crisis in the like between 08, 012. Even during the carry trade, right? People have such a short attention span that they don't realize that there's a reason why they say when there's blood in the streets, generally good time to buy. Never let a great crisis go to waste. Something along those lines. Choose the saying that you want. People have such a short attention span that they miss these opportunities, right? The opportunity is literally knocking at your door. Knock, knock, knock. Let me in. You just have to invite me in. And they don't. And then in hindsight, they're like, oh, I should have bought. Well, yeah, dummy, you should have bought, but you're too much of a little, let's leave it at that.
I think there's two things that happen here. I think the majority of people get spooked, they get fudded out of everything, right? People like Kramer saying Black Monday, all these things are coming.
Track, we lost you.
And pull back this aggressively is now the time to step out. If your long-term horizon, if you're months out at all, I mean, or even a year out, anything longer than this, if you hope you have some dry powder to put to work, I hope you do. And then on the flip side, some people will look at these exacerbated moves and think, okay, cool, I got to go all in. I got to dump everything, and they FOMO in. So it seems to be those two narratives, but you can kind of do them both.
Well, that's a reflection of human nature, number one, right? And then another thing is people are passionate about, like, we think linearly and in the direction that things are currently moving, right? But if you zoom out on a chart, that's not really how charts move. But at the time, anytime there's a big impulsive move, people are just assume and extrapolate in that direction, right? Without any real further thought towards things.
Yeah. And
Crypto even worse. If it hasn't happened in 6 hours, I got to do something.
Yeah, and the reality is the assets that you are going to have to scoop up are going to have to exist in crypto. Either that, or if you're long Tesla, like Tesla's in a significant discount right now. So if you're a TradFi guy, like Tesla is, like, if you haven't already bought into Tesla, Tesla's probably going to be one of the biggest success stories within the next like 25 years, within the next few generations. So this is time to accumulate Tesla if you were so inclined to do so, because they're in a significant discount. MicroStrategy, same thing. If you're long MicroStrategy, same exact thing. But you're not going to be able to pick up properties on a 70% discount, 80% discount, right? That's not our generation. All right. That's the generation of our parents and our grandparents. And so you have to be able to pivot into, well, what is the asset class that's going to allow me to get out of the rat race? Well, that's crypto. And I don't really care what anybody has to say because I'm very biased. So
You don't say.
It's gonna be Bitcoin. And like Track said, it's a clearance sale, it's a fire sale. If you bought Ethereum at $4,000, unfortunately for you, but guess what? Basically, you get a buy one, get 1.5 free right now. Ethereum's sitting at 1550.
That's true.
Probably gonna go lower.
Yeah, good chance on that one. As far as the traditional stock stuff goes, yeah, Tesla has always been a notoriously volatile stock, both directions. So right now, I mean, if you're interested in something like that, I don't know if it's going to get much better than this. And then on the other side of the coin, you mentioned MicroStrategies. They're actually down 50% right now from their all-time high back in November of 2024. So, I mean, I'm just saying, if you're into Bitcoin and you're into MicroStrategies, it doesn't look like a terrible buy opportunity.
Yeah. Like, can you believe it? 50% off. I think Tesla's about 400. Moonpilled. I see Moonpilled coming in the chat. I need some $900 ETH. I'm telling you,
we're
brother,
gonna get there.
There is a weekly scenario that I will show you when we get to the TA that puts us at around $800, $600 ETH. So
that would be at the levels. That would be at the levels it was in Q4 2022, which was the bottom.
Mm-hmm. bit lower
Like,
actually.
It's
it would
like
be
down
a,
to 600, 700.
That would be some vindication for the people that are always complaining that we've been in a bear market since 2021. I mean, if Ethereum makes a new bear market low, then yeah, that would be. I think that might have some ramifications for the token going into the future. But overall, I mean, it'd be some juicy buying, and it would validate Jay your theory that we'll get into later about how Ethereum is just in a corrective pattern right now.
Yep.
True.
Yeah.
Oh, real quick, we did have some other people sneaking in here. We got Iron Hands Investing says, yo. Good to see you, my man. Welcome back as always. Great to have you. And Moonpill Rational Optics saying the last time he saw this many red candles, he was at Christmas Mass.
Yeah. Hey, before we go into any other article, Z, you touched on it earlier, so I just kind of wanted to share this with the folks because a lot of people might have been asleep when this went on. So let me go ahead and share my screen here. I have an article here by the Kobe EC letter on X, actually talking about exactly what happened during the shenanigans this morning. So for those of you who did not catch it, after what was supposed to be a bloody red Black Monday, right? There was some news that came out around 9 a.m. this morning that said that Donald Trump was supposedly going to once again push the ball down along the line and delay the tariffs for another 90 days. And so that injected some confidence in the market. Don't know exactly why, because he was just pushing the damn ball down further along the line once again. And so it's like you're forestalling the pain 90 days from now. So like whatever. And so we had a $7 trillion swing in the market. All right, 8.26% of the entirety of the U.S. stock market. So it's $7 trillion swing, at least according here to the Kobe EC letter. And then shortly after, we got news from the White House, right? This was directly from the White House statement saying that we said no such thing. And then it erased it went down another 5%. So $7 trillion swing within literally hours. So this is why we say be very careful about everything that you see on X. Never trust, always verify, because I guarantee you right now, there was some. So I was having a conversation this morning with some of my peers in my mentor group, and some of these guys went long, man. And I was telling them, dudes, you better have your stop losses tight, because if you try to catch these falling knives, whether it's to the upside or downside, and you don't have your stop losses tight, you're gonna get caught in this whiplash. And I guarantee you, some of these people got caught in that whiplash. Right? Like if you long, late longs always get punished. And if you came in at the very top of that 8% swing, you're not happy right now. So just be careful. Never trust, always verify.
Well said, sir. I mean, that is the case for why the volatility index was so high as it was today, because we got those big moves both directions. Mm-hmm. So, gentlemen, I do want to let's break it down a little bit. We're a crypto channel. What are we doing talking about the S&P 500? Why is this relevant to us? Why should someone out there who wants to learn more about crypto be paying attention to the macro markets?
So I'll take that one for a second. I would say that there is a, macro markets drive. So when you look at the amount of people that hold crypto, it's like, what is it? What's the number? 3%, 10%?
3%, 3 or 4%, I think.
Yeah, it's in the single digit percentages, let's say. It is a sentiment, right? It's a proxy sentiment for investor mentality out there, especially in retail, I would say. And then it also has to do a lot with when you're looking at the tariffs and you're looking at how the markets are doing. Let's go back to the Fed's dual mandate, right? Which is to regulate monetary supply of the nation. We're disrupting sort of the status quo right now with these tariffs, would be the argument that I think pro-Trumpers would make. Would be, and I've said this before on some of our streams on DJ Roundtable, that the Fed has certain levers. They can tighten, they can ease, and they can print. That's their chess moves as a chess piece. With Trump, he has he can't make any of those moves, but he can make different moves. And this is a move that he's making that is going to affect the Fed strategy moving forward. And it's also a move that many people in Trump's role have not made. And so the Fed is not accustomed to assessing how to counter move, how to react. Yeah. And so all of that to say, crypto ultimately is very interested in, are we in QT? Are we in QE? Are we printing money? What is the overall monetary status of the world and the debt cycle? And so watching folks who can affect the Fed's view of those things insofar as how they view them is pertinent to crypto, because it's going to drive not only sentiment, but also ultimately monetary policy. And so that's the dominoes that I see in line anyway.
But Dace, you make it sound like Donald Trump is not in charge of the Federal Reserve. I thought Federal Reserve has federal in the title, so clearly it's got to be an executive branch agency.
You are correct. That would make a lot of sense, but that is not the case. So I believe you covered a fantastic book I'm still working through, which is called The Creature from Jekyll Island. If you haven't read it, please do yourself a favor and go educate yourself about the Federal Reserve. And it's, like you said, it's not very federal, not very governmental in nature.
It is a private institution separate from the government.
Yes.
Donald Trump does have the ability to appoint some people and have some political sway over there, but at the end of the day, Jerome Powell's going to do what Jerome Powell's going to do. And as much as Donnie is going to tweet at him, it's up to Jerome.
It's a tug of war of sentiment, basically, because the Fed, forward to us, the Fed says we care about, market conditions. And Trump says, okay, let's see what happens when I play with the market conditions, and there's this interesting cat and mouse game going on. It's been going on since he got in office, right? If you look at their online exchanges back and forth, some of Trump's timings of his tweets and of his marketing, pushes around the times that Powell's making announcements and during Fed meetings and things like that. This is building up to be quite interesting.
There's nothing federal and there's nothing reserve about the Federal Reserve. Period.
It's kind of an oxymoron for a title. Although
Which most people in the country should be up in arms and declaring, giving out the names of who's actually on the board, who owns the Federal Reserve. That's something that should be disclosed to the entire public, but most people don't even understand how the Federal Reserve works.
Yeah,
for sure.
To the initial question that Zenith posed on us, the reason why you pay attention to politics, the reason why you pay attention to the traditional markets, the reason why you pay attention to the global economy as a whole is because we are now very tightly correlated to all of those things. Whether you like it or not, that is the truth. That is the absolute truth. That is the gospel truth. Now, do we have certain points in time where we might decorrelate from the traditional markets? Absolutely. However, we are not an asset class that's off to the side. We are the third cousin twice removed that nobody pays attention. We are now a global asset class. At least Bitcoin and Ethereum seem to be going that way. Okay, realize that in the first two, maybe even the first 3-4 year cycles, right? The first 12 years since Bitcoin's inception, any small modicum of positive news, Argentina adopts crypto, MicroStrategy is now adding Bitcoin to their balance sheet. All of those small things, Pantera Capital, right? Starting a hedge fund that's specifically for crypto. All of those small pieces of news would pump our market significantly. Now we get a Bitcoin strategic reserve and we barely move 1% or 2%. That's not just a reflection of just how deep the liquidity of the crypto market is already, but it's also reflective of just exactly how tight we are now correlated, right? There are big players in the game. The liquidity is big. They have a lot of levers to manipulate the markets now, right? And so you have to be paying attention to all of those things because the big things that happen globally will affect us more often than they won't.
That's what I meant by it's a proxy for sentiment, right? Like, is it our market? No, but I mean, there's an awful lot of overlap in terms of the overall investor sentiment.
Yeah.
Absolutely. Well, there's a lot of interesting things that impact crypto directly. I mean, yes, TradFi treats it as a risk-on asset in the buckets. That's why we look at the Russell 2000, small cap, high risk assets for traditional TradFi. And at the same time, you got to also look at interest rates. When they cut rates, that's good for crypto, for the narratives of why people want to go to crypto. It's another reason why the macro news is that we're seeing about the trade wars and stuff that going on in exchanging in non-US dollars. Now they're switching over to cryptocurrencies for the first time since the 70s. There's a lot of this stuff starting to unfold. So yeah, unfortunately, we are correlated to the macro world, and because it's one big economic they always come out and say there's different countries, different markets. It's all correlated. Everything's connected together. There's always a pull and a tug and upstream and downstream impacts across the world to all these different markets. So they are all correlated. The interesting thing, though, go ahead, Dave.
No, please finish your thought.
I was just saying the only thing that I thought was interesting was when the news came out, the S&P 500 specifically has taken a 10.7% tank at the close today, and where Bitcoin is now, it's at 4.79% tank. So that was the more shocking thing that you would have thought the way crypto, and I hear everyone saying tariffs don't impact crypto, but once again, crypto is treated as a risk on asset. So if it's still treated as a risk on asset, you would have expected crypto to get absolutely bludgeoned over the last 3 days. Really hasn't. Yeah, it's gotten beat up some, but not to the levels like, honestly, if you would have told me the markets were tanking like that, I'd be thinking, okay, cool. So you're telling me Ethereum's down 25, 30% now over the last, few days? I mean, that's the level I would have expected, but it's held up actually relatively well compared to how bad the macro markets have gone. So that's all I got.
And Bitcoin even more so, right? Bitcoin the most so. I mean, the charts don't lie.
Very, very true. Well, with that said, shall we take a peek at those charts? Mr. J, are you ready to talk about the crypto markets?
Yeah, absolutely. Let me go ahead and share my screen here very quickly. I have my Bitcoin dominance chart here to start off, so we might as well start off with Bitcoin dominance. And if things persist to the degree that they have been over the past few months, especially if the tariff wars, especially in particular between both China and the USA, become more aggressive, because apparently if Donald Trump has gone out and said that if China does not remove their retaliatory 34% blanket tariff on all U.S. goods by April 8th or 9th, I believe, then they will respond in kind with much heavier numbers. And so that is certainly going to inject even more volatility to the downside, not just for our markets, but for markets as a whole. And so when looking at Bitcoin dominance, then it's not an unreasonable thing to say that we're probably going to challenge, if not take, our prior current cycle high for Bitcoin dominance over here at 64.35%. And probably make our run anywhere between 65 and 66% Bitcoin dominance. Ben Cohen says 66%, and he tends to be right when it comes to Bitcoin dominance. So I tend to trust Ben a little bit more than most other analysts. So that is Bitcoin dominance. And then let's go over here and take a look at the Bitcoin 60-day cycles. There are two alternative counts that we are looking for when it comes to the Lucas cycles. Zenith went over one of them yesterday, right? We have our bearish count currently on the screen, which has a day 57 cycle low. That was our prior cycle low. We have a day 13 high, and we just took the day 57 low here at 76.6K, which means you are looking for a left translated cycle all the way up until, at the earliest, between Sunday, April 20th, right? Between day 40 and 45 is probably the earliest I would expect us to find a cycle low for Bitcoin. So that puts you anywhere between April 20th and, day 40 is April 20th, and then day 45 is April 25th at the earliest, right? Ideally, day 45, because a 40-day left translated cycle would be very short. And if you were to extrapolate the full 60-day cycles, you are looking at the second week of May. I believe that is May 10th. All right, so this is the bearish scenario. Zenith yesterday brought up an alternative scenario, which is actually, believe it or not, the more bullish one, although this one is of a lower probability. The bullish count is as follows. The bullish count is that we had a left translated cycle, day 46 low over here at the 28th of February. We have a day 2 high, and we are now at the very tail end of the current 60-day cycle, which we are looking for a cycle low. Again, earliest day 40, so that'll be Wednesday, April 9th. Can you imagine if China was like, sorry, Donald, we're going to take off the tariffs, and you're going to get your way. You're going to get everything that you want on a silver platter, and we are going to bend the knee to you. Well, a day 40 cycle low, on the heels of that, good news. And then the CPI numbers, even more good news. The following day, I believe, could mark the cycle low and gigapump us into the upside. But again, we trade probabilities here, not certainties. And on a balance of probabilities, at the earliest, you're probably expecting a cycle low day 45. So that is the 14th of April. And then a full 60-day cycles out would put you at the very last week of April on Tuesday, April 29th. All right. So believe it or not, this is actually the more bullish scenario of the two. However, because a day 2 cycle high is going to be the first and earliest cycle high that we've ever had since the inception of Bitcoin. Once again, you're at the very, very end of the distribution curve here, and we have to trade the probabilities. And probabilities tell me that it's unlikely that we have a day 2 cycle high. But many things this current 4-year cycle have been different, so this might be different. Who knows? Right? If structure tells me then to get bullish, then I will get bullish. But until then, I am not going to assume the extremes. All right. Now, in terms of price, let's go over the bullish scenario first. The bullish scenario actually lines up pretty well with the bullish 60-day cycle count. The bullish scenario is as follows. We have a zigzag, A and B already in, and we are looking for the C wave to come in, which is going to be an ending diagonal. All right. The ending diagonal is on your red count of a lower degree, and you're looking for a 5-wave impulse to move to the downside. And you're looking for another low to take our current low at about, what is that, $74,000 plus change, right? And the reason why I would not put the low here, one, in terms of structure, this actually might already be, in terms of structure, this might be a very, very reasonable place to put your low in for the diagonal, right? Because they are all either simple zigzags or zigzag family structures, which is what you look for a diagonal. However, this is where using a combination of different variables, in this case, I use Elliott wave and the 60-day cycle analysis in order to dictate and in order to find some confluence within my trading strategy. And because even regardless of which count you look at the bullish count or you look at the bearish count, realize that even looking at the bullish count, we would have to say that if this is the low in for the 60-day cycle, you would have a day 38 low, which is, again, very, very, very unlikely. And so, even though we do have the structure, in terms of time, I am looking for another low in at the earliest, probably sometime day 40, which is going to be April 9th. But ideally, day 45 at the earliest. So that puts you at April 14th. All right, so this is your bullish structure. Yes, we are looking for another low. However, the bleeding is not going to be as severe as if we were to get even more extended. And then after we find the low, we get a continuation to the upside. So that is the bullish scenario for Bitcoin on the daily. Now, let's go over the local structures for the bearish scenario. Let's go down to the 4-hour. On the 4-hour, we are taking a look at another move to the downside in an A, B, C. So what you're looking for, right, is a zigzag. Oh, actually, this is not an ABC. Forgive me. Let me go ahead and remove that. This is a WXY. Right? You are looking at a WXY. Oh, that's not it. We're looking for a W that's already in, an X to follow, and then a C, a Y to come at a later point in time. All right. This is your bearish scenario on the local structures. Now, what are your targets for? What are your targets for the wave X? Your X could be anything, right? You have a zigzag in W. Your X could either be another zigzag. It could be a triangle. It could be a flat, or it could be another complex sideways combo, right? It could be any corrective structures. It is going to be a waiting game. We have to be a little bit more patient as the structure matures before we get an idea of what the X is going to be. However, we can have some targets in terms of some very common areas of interest for the current structures, right? If we were to head a little bit further up, then a particular point of interest for me in terms of resistance is, number one, the naked weekly point of control, which is currently sitting at 82,589. If you notice that just sitting above the point of control is the 618 Fibonacci at 8K. And so if we were to head a little bit further to the upside, then I would look at the 618 and the weekly naked point of control to serve as stiff areas of resistance before eventually coming down. In terms of time, right? In terms of time, ideally, your X would finish at or after the 382 fib time, which puts us at Thursday, April 10th. This is a rare target, right? However, time is never an invalidation. So as long as we meet the minimum targets, then I am good in that aspect. Right. And so that is our current scenario. Oh, let me toggle that off. That is our current scenario on the local structures, right? So you're looking for a bounce to the upside, get rejected at the point of control, and then head down, take the low of W, and then we look for lower prices. All right, so that is currently your bearish scenario locally for Bitcoin. All right. And if you want to get bullish, is there a bullish argument locally? Yeah, absolutely. On the lower time frames, do you have impulsive structures here? Yes, you're absolutely correct. You do have impulsive structures to the upside when you get granular and you look at the 15-minute time frames, right? You could have a multi 1-2 scenario here, right? 1, 2, 1, 2, 3, 4, and you're looking for a 5 rejection, 3-wave correction, and then eventual continuation to the upside. However, this is the 15-minute time frame. And like I always say, it is the onus of responsibility belongs to the bulls to convince us that they are ready to get bullish. Otherwise, we will assume that every single move to the upside is a counter trend rally and it will eventually get rejected before taking the local low, heading into lower prices. All right. So right now, we are still leaning bearish, both in terms of time because of the current 60-day cycle counts and because of structures. All right. The bears have not given up the lead. So that is what we got for Bitcoin. Z, do you have anything to add?
I guess just as a quick note on what you were talking about for the 60-day cycles previously. You mentioned that there is the more bullish scenario, the much less probable, but the bullish scenario where instead of having the counts where we've had them previously, which is that we're currently in a cycle with the day 13 high, but rather shift it just one tick over to the last swing low and then have what appears to be a day 2 high. Although if you discount some of that action, there's another case for a potential like day 6 high there, which is still not super reasonable, but more reasonable than a day 2 high.
Yeah.
How I do my 60-day cycle analysis is I use normal distributions. So based on the data set that I have an average of about 59.5 for the average cycle length, and my standard deviation is about 9. In English, what that means is I can create probability ranges based on how long I think cycles are going to be. If you're talking about how we get a new cycle low there for a 40-day cycle with the potential pullback of Chinese tariffs, however improbable that it may be, that would put you in a 40-day cycle. The probability, or how about this? 40-day and shorter cycles will make up 1.5% of your entire data set. So that is a very, very, very tiny amount of that. So the probability of that happening is low, but it's a possibility. Can't rule anything out because we live in the world of probabilities. So when we're looking at that stuff, that's why we do say that scenario, while it could make sense on the macro market, looking at all the news events, seeing if we can tie it into the data points, that's the probability for something like that.
Yeah.
I think more personally, I do believe that the more normal kind of probably like 55 to 60 day cycle, somewhere in there, that is the more probable scenario for me. So that's what I'm kind of hedging my bets on.
Yep. Yeah. Is it certainly possible? Absolutely. And I am willing to change my mind and pivot extremely quickly, very quickly, if the structure changes in the opposite direction. But so far, our bias, right, our short-term bearish bias has been proven correct since the year began.
Crazy to think so, but yeah, we've effectively just had 3 full months of action to the downside.
Yeah.
At some point, there will be a trend correction, I do believe, but the question is just going to be when and where.
Yeah. And I don't mind being late, right? Because I can long the correction. Believe me, we went over the 15-minute structures. If we do get a 5-wave impulsive move to the upside with very little overlap, guess what follows a 5-wave move? an eventual 3-wave correction. And if that correction is very sideways, rangy in nature and respects supports, guess what? I will be entering a long at the very tail end of that correction. I don't mind entering like an extra 2 to 5% up when we're talking about Bitcoin. I don't mind entering another like 5 to 10% up when we're talking about Ethereum. I don't care. I'd rather have a little bit more certainty than try to catch a falling knife. I don't want to get caught in the whiplash.
Well said, sir. Tell you what, let's take this moment to transition to a little bit of on-chain data. So, the favorite liquidations. How many people got wrecked today? Well, more than yesterday, actually. We have $992 million worth. Didn't quite hit that magical billion number, but an interesting note here is it's longs and shorts that got liquidated, and that's largely due to the both direction action that we had going on today. So, looking down here, yesterday we had a little bit more when it comes to the longs getting liquidated, but we had more total liquidations today. We are actually seeing that this is a rather large liquidation event, which I'm sure is no surprise to anybody at this point. But the interesting note for me is that there are people that still had longs on today, whether it's just on short time frames or looking for something a little bit longer. But we were getting liquidations of the longs, which shows that there is a good chunk of the market that does have that bullish scenario in play for them. And unfortunately, they were just wrong about it today. Let's transition over to the ETFs. So looking at the ETF flow, this is Ethereum. Let's go to Bitcoin. That tiny little red candle there at the end, that is today for ETF flow. And you might notice it's not really large and it's slightly down, but it's not a large move. So what that tells me is that the ETFs are not largely selling at this point in anticipation of more downwards action. So when it comes to the on-chain data, at least for the Bitcoin ETF, what I'm seeing is very low volume on the ETFs, and it's slightly negative. But at the same time, though, you could almost just chop that up to noise effectively.
I was gonna say, what, 4 or 5 days ago we sold more? I mean, that is kind of surprising, to be honest.
Yeah, that's very, very true. What was that? The first. So the day before the tariffs actually went into place, before the S&P started doing its best cliff jumper interpretation.
Yeah, interesting. Yeah, that's a tiny little candle for today. That's surprising.
You know, it's like crypto's front running.
Track, you sound really far away.
Sorry, I was just saying it seems like that crypto is front running the move almost.
Maybe a bit, but at the same time, I think that what we have been seeing is that the crypto market is holding up better than traditional markets, which, I don't know, it depends on which narrative you believe, whether crypto is a store of value or a risk-on asset. I think we are yet to see that really definitively play out here for this current event.
Well, one thing I saw about the S&P 500 was I always thought when we had this pullback, it needed a backfill. And I know I'm talking traditional again, but it's funny, at the low of the day, it was right around the breakout when S&P broke out to its all-time high, which was basically all the way back in January of 2024. So at the open, the S&P 500 had wiped out everything that it had gained in 2024 and 2025. So that's a hell of a pullback. So it definitely has filled the gap on the traditional. So just saying, more clarity, more opportunity for us to move up now. Now you can't say basically the markets are overbought, because that was the other narrative. We can't really go higher until things correct. Well, you certainly got a correction, so you can't. That narrative's out the door now.
Very, very true. Is there any other on-chain data you gentlemen would like to look at?
No, sir.
Alrighty, we'll tell you what, real quick. We do have our good buddy Will Stevenson of the DGen Roundtable showing up here saying, like that smash button. Much appreciated, good sir. Good to see you as always.
So yeah, I was curious, were there any spikes of long-term holders in Bitcoin or Ethereum over these last couple of days, or was it all just short-term holders? I know we keep looking at that one, but I was just curious because of just the aggressive nature of the macros and the traditional markets. I was curious if that bled over to shaking any long-term hands out.
Man, that story is getting. This is the kind of stuff that people tend to not pay attention to. We go over a lot of the on-chain data in the chats. So let me go ahead and just share this chart really quick once again, because we went over it a few days ago, but this actually has gotten even worse over the last few days. So let me pull up this tweet here by Glassnode. So let me go and share my screen really quickly so you guys have a visual. So Glassnode is one of the premier websites that shares a lot of on-chain data. And so I took a look at some of the stuff that they were posting earlier. Here's one in particular. You'll notice that this particular chart we went over a few days ago. This is just another review over a Glassnode. And what they're basically showcasing here is that over the past few months, and then it's getting more exacerbated today, is that on the left side of the screen here, you'll see that there are groups of people separated by the amount of Bitcoin that they hold, right? They're separated by cohorts. There are people who hold greater than 10,000 Bitcoin. There's a cohort between 1 and 10,000 Bitcoin, and then it goes all the way down into the group of people who hold less than 1 entire Bitcoin. And you can see here that's on the right side of the screen, the scale here going from red to blue basically displays exactly displays what their score are. And a score of greater than 1 means that they're accumulating much heavier, and then that a score of like getting into the red, less than 0, means that they're accumulating very little, or they're actually selling out of their positions. And you can see that the distribution between the people that hold greater than 10,000 Bitcoin and the people that hold, even if we go down to the next level, the only people who are separating themselves from the rest of the group are the actual whales. You can see here that they're the only ones in blue with a score getting close to 1. Everybody else below them, even the people who have anywhere between 1 to 10,000 Bitcoin, are in the red. Right? So the distribution is getting wider and wider and wider and wider. So yeah, the TLDR, to answer Tracker's question, is that yeah, the whales are accumulating because they're getting closer and closer and closer to 1, and everybody else below that, guess what? They're not. They're either selling or they're just holding their positions. Right? They're not entering the market because they're still in the red. So that's the unfortunate reality, and it'll continue in the exact same way. Right? People that know, right, that believe in the value proposition of Bitcoin, whether it's the institutions or just whales who have been around for a very long time, they're just steady accumulating. Everything to them is a discount. Any dip, whether large or small, is an opportunity for them to buy more. And you can see there just exactly how wide the discrepancy is. Like the people that have more than 10,000 and then the next level below them, they're still in the red. That's crazy. That's crazy. To see exactly just how wide that distribution is getting.
The next cohort, though, it looked like it's pretty mixed, pretty good though, as far as like sellers and holders. So, but basically what you're saying, and I agree, the larger the whale, the more they're just accumulating and holding is basically what it is. But some of the small whales are holding too, is what it showed me as well. So yeah.
Well, they might be holding, but the only people who are accumulating heavier and heavier and heavier are the ones that have a balance of greater than 10,000. They're the only ones in blue.
Yeah. Those are the countries. Those are the countries and the other agencies and the other big dogs out there that have been accumulating for a while. Those are the Fidelity, State Streets, BlackRocks.
True. Real quick, I got the long-term holder supply. I think the chart tells a very similar to picture exactly what Jay was talking about there, which is that the long-term holder supply has stayed relatively high. The people that are buying Bitcoin, they're buying and holding on for a long, long time. We did see an accumulation period during. We did see an accumulation period pretty much before we had our run up, and then we also have seen a bit more accumulation through. Or sorry, excuse me. This is the last market. This is this market. So we had a lot of accumulation through the bear market. After we had that pretty much full year of sideways action, we didn't see a whole lot of accumulation until we started to get to the tail end of it, and then we actually saw a good chunk of accumulation before we had the run up in November. Yeah. As far as the short-term holders goes, we're seeing that the short-term holders right now are largely underwater. And until they're pretty much means that people are going to have to start buying Bitcoin at this lower price to get that realized value down. Because what this is telling me is that right now, people that have been the long-term holders in the institutions, those have been the people that have been really the steady hands. There's been a lot of folks that have been accumulating Bitcoin up along the way. And then now we're at this point in the market where we've dipped low enough where people are actually in the red. So eventually,
dude, look at, so comparatively, look at the realized price for short-term holders. What's the length of time they consider short-term holders here? Z, does it say? Go up in the chart. It should tell you that
Maybe
in
6 months.
the average price, which
155
coins have
days.
moved on the Bitcoin network over the past 155 days.
Okay, so
There you go.
3, 6, 9, 12, 15. So they consider short-term holders anywhere below 5 months, right? Look at their realized price in green, sitting all the way above there. I think that's probably close. What's the ticker there, Z? At the very tail end. What's the realized price for the
Realized
for
price is
short-term
92,800. Current Bitcoin price
92,800.
79.2.
So they're underwater. Guess what the realized price is for long-term holders? We're talking about like 4 years plus. Just take a
guessing
guess,
like
man, what
the
their realized
20s.
price is. Yeah, probably sub $20,000, sub $15,000.
Something
Yeah.
like that. All
So
right,
it-
gentlemen.
that says a story. There's a big story there, though. Obviously, it tells you that the long-term investors are typically the ones that come out on top. It also tells you that the whales have a ton of money to throw around too. That they have a luxury to just sit there and hold. I mean, if you're a whale with that kind of money, you got a lot of buying power. So you've got nothing but time, because it's not going to change your lifestyle
Yeah.
to gain
time.
more, but you want to accumulate more. The short-term holders are looking for the quick turnaround, but we know people in crypto, they have zero patience. They expect 20x in a month or a week. So plus that short-term price you're seeing, it's going to keep getting diluted, because as new short-term holders keep coming in or leaving, it's going to keep suppressing, making that realized dollar cost average, whatever that was we were looking at, that basically
Realized
is going
price,
to keep
yeah.
realized price is going to keep staying high, because you're going to have short-term exits and levers that are going to constantly keep diluting those narratives, while the long-term holders just keep accumulating and buying. So like I said, that's the huge thing that people don't get, is these institutions and big whales who have already been here a long time, they've got nothing but money and time, and it's not going to change. They don't have to react. They can just keep accumulating. Here's the other thing, whether they even believe in crypto or not, they're going to hedge their bets, because it's a diversified portfolio for them. And when I mean diversified portfolio for those guys,
Treasuries.
sorry, and just to say what kind of diluted in our diversified portfolio that they have is like, well, they own exotic cars, artwork, cattle farms, gold reserves, mines. I mean, they've got stuff that we can only wrap our heads around. So they're just going to keep buying more. And that's the sad part about it, which is going to tie into some of the narratives we're seeing where, it's going to be more centralized, which is not good for the traditional, crypto folks who believe in the technology. But yeah, it says a lot to those charts.
You know what makes it even sadder, Track, is that the distribution phase for long-term holders is opposite the distribution phase for short-term holders. The distribution phase for like, even if you just look at within the last 2 quarters or so, the long-term holder distribution phase occurred close to the top or during the run-up, close to $100,000. And then the distribution phase for the short-term holders happens now, because they're the ones selling out. And the accumulation phase for the long-term holders happens now. Like, it is always the opposite. It is so sad to see. And you can see it, like all that on-chain data is right there. I guarantee you that website that the Z uses, it has all that stuff, because it has all the metrics that I use on CryptoQuant and Glassstone.
I just pulled up the long-term average realized price, Jay. It's 26,000.
Oh, wow.
Bro!
And that sample is everybody over 155. Whether you're 156 or you're 10 years, you're in that bucket. So that's got some OGs where their cost is pennies, of course. And that's why that number is so much lower. And so, yeah, that's a crazy number.
Wild
It
stuff.
reminds me of the meme. It reminds me of the meme when the guy comes home for Thanksgiving and everybody in the family is asking him, "How's that crypto doing? It's gotten beat up pretty good here." It's like, dude, I bought in at 20,000. What are you talking about?
Yeah.
Yeah, it just depends where you got in. True. All right, gentlemen, I do want to close on one final story for the evening to give our final thoughts before we get out of here. So, Scott Bessent, Treasury Secretary, says that up to 70 nations want to negotiate over the Trump tariffs. So, coming to us from Fox Business. I want to bring this to you guys to ask the question. Do we think, I think that we've gotten a massive news shock very clearly, and that we're having a realignment of the business environment going into the future. So whether it's people trying to negotiate the tariffs in order to reduce them, or if the tariffs are here to stay, do you guys think that we're heading towards a more stable business environment, or are we going to keep being rocky for pretty much the rest of the year?
I'm going to say we are definitely headed towards a stable business environment. Now, it might be higher prices than people want, but I think it's going to be growth. You know, I think along with higher prices, you're going to see growth being stimulated, potentially from the Fed, but also from big institutions that are making changes and being opportunistic in what's going on. And that article said it. Like, I think, and I said this last night, Trump is not figuratively, literally an ex-WWE employee. And so, you know, if there's anybody who can put on a show and get the attention, it's him. He has that skill. And so there are a lot of the pro-Trumpers are saying, you know, this is illuminating how the U.S. has been treated in all of its trade agreements. Some are worse than others. You put the blanket down, and then you come off on the folks that are being more fair to you more quickly, and now all of a sudden you look a bit more benevolent. You know, there's lots of theory about some of the theater behind it all, but one thing's for sure, that he can manage that. You know, historically has shown aptitude for that managing of the public eye. Let's say that.
I think short term, there's still going to be chaos. And in short term, I mean, up until the end of Q2, I think it's probably we're still going to get a ton of volatility. But in the long term, I think for sure a much more stable and more productive environment. And the reason why I say that is because, look, right now, the entire world is trying to figure out at what will Trump give? Like, where is there slack in the rope? And I think a lot of these people are finding out that Donald Trump is he is once in like few generations type of presidents, where he knows that he has up until midterms. Until then, he has basically zero walls in front of him, right? Aside from anything he does extremely egregious, which you know, that's like a different conversation. But he knows that he basically has no roadblocks. Nobody's going to be able to stonewall him up until midterms. And the world is finding out right now that he is somebody that there's not a lot of slack in that rope. He's not going to give you an inch. And that these countries are finding out really quickly that they're eventually going to have to capitulate to his demands, right? At least up until midterms, right? And so within the next quarter, within Q2, like we're in Q2 right now, it's still going to be rocky, but within the entire 4-year term that he's going to serve, we're going to do just fine, right? Because they're not going to be able to push him around, right? He's going to be amicable in some areas, but Donald Trump, and he's had the same exact stance since way back when. He doesn't like it when America gets taken advantage of, and unfortunately, the people who has taken that Oval Office before him has allowed that, right? Spineless presidents, no backbone, right? Too much give. And for decades, they have taken an inch and then they've taken miles. And you're not going to get that with DJT. And they're finding that out really quickly.
True. Tracker, what do you think? More stable or less stable going into the future?
Short term for me would be like over the next month. It's going to be choppy to down, but I don't know how much down, because we think about the shock is here. Could we have some more surprise on tariffs because countries don't want to play around? I still personally think I'm sorry, I'm more sinister in the sense that I think this is all theater. A lot of this is theater. I'm sorry to say it, but I think it is. And I think all the countries are going to get what they want. And that is a combination of they're going to renegotiate tariffs, but part of that also is restructuring U.S. debt that these countries hold. And if we cut rates and stuff, they can renegotiate that as a lever with these countries to get what they want as well. So there's a lot of things here that they have. I mean, Japan's sitting on $1.1 trillion in U.S. debt. China's got $750 billion. United Kingdom's got $690 billion. Luxembourg, $373 billion. I mean, that's a lot. And the list goes on and on and on. So,
I would actually push back a bit on that track. If we're talking about things going through the Congress and Senate, right? Congress creates a bill that's like 1,000 pages. It goes through the Senate. They negotiate, add fat here, cut fat here. That way everybody's happy. Right. This is strictly Donald Trump. I don't think Donald Trump is going to allow them to add any fat anywhere.
Well, I don't know about structuring bill. I think there's
than usual.
I think there's going to be, U.S. has a lot of leverage right now because we have one of the largest consumers in the entire world. We also have most people are holding U.S. debt. So there's levers there that they can work out, negotiate with these countries to get things moving along a lot quicker. I think it's going to be rocky in the next month. I think there's going to be more clarity coming out over the next 2 to 3 months. There's going to be a lot more clarity for the markets. And I think we're going to this is one that the markets are in shock right now. This is what you get. I'm totally in your guys' favor when we watch those DCA levels, because right now, if you do have dry powder, you need to be looking at those levels you're willing to put something back into the market on if you're sitting on the sidelines, because these are golden opportunities, period. Now, like I said, if you're long-term horizon, anything more than 6 months to a year out, holding longer than that, dude, this is a gift. These are gifts. So keep taking these gifts and watch us and pay attention to us and the Jay's TA and all the on-chain data that Dace and Zenith are giving us here. Watch that stuff, because we're going to be giving you information that's going to help you guys, guide you through this, to tell you when those opportunities are good, high-risk probability chances to put stuff on. Those are educated guesses to put those DCA levels on. But in the short term, it's going to be a little rocky, a little bit uncertain, but I still think overall when this all comes out of it, U.S. is going to renegotiate these tariffs. They're going to get ripped off. There's going to be some rate cuts coming from the feds, and we're going to be moving back up again. This is what it is. The traditional markets now have backfilled everything since the all-time highs where they broke out in 2024. Now they backfilled. So now they can proceed to go back up again. Things are going to be choppy. But that's how I look at it. Short term to me is 1 to 2 months, maybe 3 months, fair. But over the course of like next 4, 5, 6 months, I think we're going to be in much better places, and the markets are going to be much happier on having that clarity of what's going on. Anytime you have these shocks where VIX spikes, that's the time to capitalize on your DCA levels. Always. They're always have been a gift. I don't care what time it's ever happened in history. It's always been a great gift.
Well said, sir. And by the way, I think Will is with you guys when he says it's all theater. I think I might take a pretty similar position, call it the political cynic position, which is that, as Jay, you alluded to, which is that until midterms, Donald Trump has a lot of leeway to go through. But at the same time, political numbers are largely determined by economics. So I think that, this is also coming from the guy who allegedly has written more books than he's ever read, and that number of books would be one, and it's The Art of the Deal. I think there's a very high possibility that this is the big ask. I think that there are legitimate reasons for having tariffs on very precious or scarce or necessary industries such as national defense. Like relying on a political adversary to produce your military might is probably foolish. So in that sense, it makes sense. But when we look at that list, we already got 70 countries that are already looking to negotiate the tariffs. That tells me that this was the big ask. We're going to get towards some sort of agreement moving into the future, and we're going to get that more stable business environment coming down the road, probably like a month or two from now. And then after that, that should be the runway set for American industry to be able to deal with the new tariffs. And hopefully we can actually see the economy kind of reconfigure and get going in that new horizon direction and start living in the new reality and start reaping the benefits from it. So that's what I'm looking at. I think we have a similar idea going around the table today, saying that, it's going to be choppy in the near term, but we should arrive at a new a stable business environment a few months from now.
Yep. Agreed.
All right, folks, that is all we have for you tonight. As always, please go check us out on Twitter and YouTube. You're already on YouTube if you're watching us, but Walk the Block NDF over on Twitter. Get up to date with all the stuff going on over there. But outside of that, thank you so much, folks, for joining us. Gentlemen, where can the folks find you and what you got going on? Jay, what you got?
You can find me on Instagram at agent_J Schroth, on X at _P90hex, but mostly you could find me on the Telegram. That's where I spend most of my time. That's where we create the most content. And so jump in the Telegram chat, man. As far as what we got going on in the near future, probably going to be here 7:45 a.m. MST for the pre-market open stream, or I should say market open stream, and probably more streams into the week. So
Love to hear it. Tracker.
Pretty much over on Telegram with the DJ Roundtable. Over there, we're over there on jumping in with Jay's on streams and stuff. And of course, you can always catch us here on Mondays. And of course, hopefully in the near future, we'll have some things brewing in the background. Hope to announce here pretty shortly and soon. So outside of that, that's where you can catch us.
Excellent. Dace, all you, sir.
Find me on Instagram and on X at Dace Northall. And come join our Telegram, DJ Roundtable. I'm in the streams with Agent J. You know, 3 of us, 4 of us, we're in there. We're all the regular folks. And so there's lots of other people that join. Come ask your questions. Come get to know us. Come participate. Love to have you.
Love to hear
Just to piggyback on what Dave said, yeah, and just to let you guys know, the Telegram, it's a really good community. Everybody respects each other. Do we have disagreements on stuff? Yeah, it's good, but it's really good communications that are really good debates that go back and forth to trying to stress test our theories and our ideas. But a lot of good information there. You can learn a lot, and it's free.
Well said. Jump in the Telegram, catch us over there, catch us on Twitter, catch the morning streams, and then catch us next week as we give you a new positional update for where we stand in the markets as we continue to navigate digital finance together. Ladies and gentlemen, thank you so much for joining us. I hope that you all have a fantastic week. Good night.